Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the modern market. That is the crypto market, the NFT market, and how to, we hope, make some or a lot of money on the internet. Loaded up for discussion today. We have Sol outperforming the other majors up to $220. We've got Pump surging 11% to $5.3 billion FDV. We'll discuss that in a bit. We've got the crypto exchange Gemini planning to go public on the NASDAQ this week, aim to raise 317 million. And NASDAQ will be participating as strategic investors, committing 50 mil. And we'll talk Hyperliquid's USDH competition. Native markets are the clear polymarket favorite. Bread will break that down a little bit after a strong proposal from Athena came in. Two, we've also got the latest on price action on crypto and NFTs as usual, and a discussion on where we think attention is flowing. So stay tuned for that. I'm delighted to say I've got Legendary and Bread in the co-host seats with me today. We're ready to get into it, but just a reminder, friends, before we do, nothing that we say here is financial advice. This market is very, very risky. We do not know anything for sure. So please, as always, exercise your own judgment and use some caution. This is not financial advice. With that out of the way, Legendary, it is Wednesday. It is the 10th of September. How are you doing and how are you feeling?
GM Jim, I'm doing quite well. I had a fantastic morning as I finally, talking about portfolio management, I found the time to go through some of my physical Pokemon cards.
Okay.
Brett's excited as well. I like that. And I was going to some of my Japanese promo cards, and I posted early in our Telegram chat that among these cards, I found this little guy.
Oh, let's see. Let me see how I can see that well.
Yeah, triple Pikachu.
Yeah, this beautiful Pikachu, which
quadruple Pikachu.
Quadruple, I can't count. Which looks pretty good, which I will send to PSA for grading, because if this gets graded as a PSA 10, that's a 2K card. That was just in my house, which I wasn't aware of. I'm typically aware of the cards that I have, but that was like, some sort of token that you forgot you had, and it's actually turned out to be somewhat valuable.
I'm going to need you to tell me where I can see how much a Japanese Ninetales holographic's worth. I vividly remember my younger brother, because we shared a portfolio, trading a Charizard, American Charizard, for a Japanese Ninetales because he got it looked good. It was foreign language, so clearly worth more money. So
exotic.
I'm pretty sure he just got duped by the card shop owner. Absolutely, definitely got duped by the card shop owner, knowing what it was and when we were doing this stuff. But
if you tell me,
this is me like going back and checking the unrevealed thing.
It's like checking the prices of tokens that you sold, basically.
Yeah.
Let me know what year it was, and I will look it up, because there's like a gajillion.
Yeah, matters.
Yeah.
I mean, bro, I'm old. I mean, bro, we're about the same age, right? So I guess it would probably be about the same. I was in it, man. I was going to Burger King every Friday for the swap. I had the little plastic Pokemon balls from that. I went to all the movies. I had all the promo shit from that. I had all 151 in the binder stacked, because I just literally ride my bike to the card shop, and I would literally get my mom would leave pizza money for us, and I would use that, starve myself, and instead buy Pokemon.
Love it. By the way, you mentioned those movie cards. Like in 2000, when you got this Mew with the Egyptian style hieroglyphs on it, that is now worth a PSA 10 $350 or so. And I had like a dozen of those, because I remember seeing the movie and begging the lady to give me more than one card. She was like, "Yeah, here you go. You have all of them, basically."
Yep, that's hilarious. I'm constantly. I think it's the confluence between Pokemon or trading card game players, collectors, and this industry is crazy. I'm always amazed by that, and I'm kind of amazed. Why am I here? I found none of this interesting when I was a kid for some reason. I didn't enjoy it at all. If I had to collect anything, it'd be coins. I really liked coins. Maybe that's
you get a collector's heart.
Yeah, I liked coins and old money.
Did you play RuneScape? Did you have that arc?
No, I didn't. I didn't like games, man. I know, because I guess crypto is kind of like an MMO or whatever. That's what people say. But I think this is I don't know if this will resonate with anyone out there. like, I think that I got to the bottom of why I didn't like games. It's because I'm an only child. And so all these games, you're like just kind of playing by yourself anyway, right? But I was like, well, I'm already by myself. So I'd rather go out and play football with people and like go out and do things with people. Cause I was by myself anyway. What am I going to do playing more games by myself? You know what I mean?
I'm a local child too. I think you just skip the intermediary steps because you said, you like collecting money, like you like collecting coins. We went through the hoops of, I collect Pokemon cards and they become valuable. I collect NFTs and they become valuable. You were like, fuck that. I'm just going to collect money and make more money. You skipped everything in the middle. So it's just a more efficient approach ultimately.
Yeah, maybe. Just go straight to the money. Funky, your hand is raised. Welcome to the stage, man. What's your take on childhood upbringing and connection to collecting?
I appreciate that you're a pneumatist because that certainly was my thing too when I was a kid. But I just realized really how old I am because when I started teaching and I was already in my 20s, this is what kids were talking about. Pokemon, and there was another one. Yu-Gi-Oh! Was that also like a thing?
Yep.
Oh my
Blue Eyes
gosh.
White Dragon.
All my freshmen in my English 1 class were just like, if I saw them goofing off, it's because they were trying to play this card game like under their desk or whatever. But yeah, you're bringing back some memories.
There we go. Like it. Right. Being efficient about it. Let's get back to the price action. Let's get back to the money that we're here to discuss today. Oh, actually, Brett, before we get there, what have you been up to? You had some big announcements on the MegaETH side. Some big stuff coming out on Monday, I believe, or Tuesday, was it? What's going on?
Yeah. I'm sure I've been drawn away from everything. So hopefully you guys talked about it, or maybe you guys talked about it yesterday. But yeah, we announced a stablecoin in partnership with Athena for MegaETH. So it's pretty cool. It's actually really topical because it's basically the same thing that Hyperliquid is now positioning for right now, and they are the benefit of us doing it when we did is that we don't have to reverse course of all of the integrations of another stablecoin. Right? Like they have USDC on their platform. It's several $1 billion worth not stuck, but like locked in their bridge, and it's like used as collateral and created liquidity and all their perps in their perps protocol. So for us, we announced that partnership on Monday so that we can basically start day 0 building up what Hyperliquid is going to try to do with USDH. And the reason like they're trying to do that, right, is that we've been talking about it for months, is these stablecoin companies are making a shit ton of money, right? Yes. So Hyperliquid alone right now, if you take its current USDH supply, our USDC supply that's in like being used as collateral, they're losing like $200 to $250 million a year that could be internalized in the protocol.
Wild.
Yeah,
absolutely wild. And like, so the idea is to be a part of the interest revenue stream and direct it back to the protocol or the community in some way, right? The ecosystem.
Yeah, correct. Like it's like, yeah, with Hyperliquid right now, with the current construction, there is 0% chance that money goes back to Hyperliquid's ecosystem, right? Like if they had an extra $200 to $250 million in buy pressure, that makes it 1.25. That's 25% of a $1 billion a year protocol, right? Like that's more than like most things in this entire ecosystem, right? Alone, just in that stablecoin stuff, on top of what they're already doing. So they're implementing USDH in order to implement. It's all on our skin to implement like what we're trying to do from day one. So like now this could, if we try to capture as much as we can, we're already working with Mafia teams. I don't know if you guys saw the Athena announcement. Athena actually called out a lot of like the Mafia teams that have already committed to using it day 1. So like whenever you go to play Euphoria in the future, like on the back end, it will be a USDM implementation, right? So as people go in and play games and do stuff and build up their perps positions, all that shit, they're going to do it with USDM on the back end. Because we're going to do our best to like make that the case, and then we will internalize that yield, and then we can use that yield to go back to the ecosystem, acquire assets, like
just be strategic about how you deploy rather than Circle make all that money and then they just keep the money.
Like I have been vocally bearish on infrastructure on this show for 6 months, a year, whatever. So like this is the other component of that was like, okay, now we can subsidize our sequencer costs, right? And if you guys look at the business model of Base, for instance, right? Base, and same thing with like Solana or whatever, like all of these ecosystems, they pay out their validators and or the sequencer team running the sequencer by having some level of margin or capturing fees on every transaction, right?
Yes.
So there's cost to run the infrastructure, and then there's margin to run the business to generate income, and then like basically there's nothing else. It's like Base, when they're saying, oh, we've made $100 million this year, $150 million. That's $150 million that they've charged to users on top of the actual cost to run the infrastructure, like in the ecosystem, right? So now we can say, well, look, our transaction costs can be even cheaper than we already planned to because of the performance. We can run it strictly at cost. Like we'll run the infrastructure, we'll do that. We'll run it basically at zero. And then on top of that, all of our revenue just comes and scales with the chain, right? So now as we do things to make sure the chain is faster and more performant, the ecosystem grows, liquidity comes, applications are coming here. All of that stuff increases the TVL of the chain. Hopefully that's the intent. That means now on the back end, we're gaining, a proportional growth with that in our revenue streams. So now we've disconnected those two things so that we can be sustainable, we can grow, we can fund the ecosystem without directly having to charge users on every single transaction and generate fake ones or like game the system, whatever.
Got it. Yeah, that's nice, because so long as TVL rises, you're very well aligned to capture the value as TVL rises, and then you kind of got that new way to make money as part of it.
And we'll release more information on like how exactly we plan on spending the money. For legal reasons, we can't just say it right now.
Okay.
But yeah, it's proportional. Like the flywheel you hope to see is like you have apps that are cool coming in the ecosystem that grows the TVL of stablecoins. That increases our funding. We spend more money on the ecosystem that attracts more apps. Those apps draw in more TVL. So you get a little bit of that flywheel of those things being symbiotic.
It reminds me a little bit, not entirely, and we're going to get into the main stuff in a moment, but it reminds me a little bit of how Plasma is. Maybe it's not exactly the same at all, but in principle, when Plasma did their raise, they accepted all types of stablecoins. And I don't know if you're going to go as far as do this.
We will.
But they accepted all types
at the bridge, you'll come in, everything will swap in. Yeah.
But then, when on the other side, when you get this money back, you're getting it in USDT. Are you able to say, like, is that as clear as you're going to do it? Like you can bridge whatever dollar you want, but when it turns up on Mega, it's going to be USDM. Is that kind of how?
I mean, we'll still provide optionality. So like in our actual bridge flow, like we're already designing it now and have all that stuff going. It's like you'll come in, you'll be presented with options. We still have other stable coins on the chain that like you can use, like USDT Zero. We were one of the first partners, and we also have Cap Labs, which is they'll CUSD. Like they're a yield bearing stable coin. So like if you come in and you want a non-yield bearing alternative, like that's us. We're trying to represent ourselves as like a USDC, except on the back end, we can flip between Athena's multiple products. So like right now it's T-bills. And then once T-bills compress, we can switch over to USDE, right? So we can dance. And then we'll have, so you have the three options, but we'll prioritize and try to push people towards USDM.
Okay. Like it. Interesting stuff. I thought it was helpful to just get a quick download there, because I think that's quite an interesting move. We're also going to talk the Hyperliquid USDH conversation a little bit later, so we'll tie that in again a little bit later. But let's keep it moving, guys, to get you up to speed with everything else you need to know. Get back to the money conversation in terms of price action, starting with Bitcoin, which is flat around $112,000. We've got ETH, which is flat at 4.3K. We've got XRP down 1% to just under $3. BNB is flat at 881. Solana is up to $220. Up 5%.
I called it, bro. Man, I'm good at this game without actually making any actual portfolio decisions. Like I was like, I think it's a Solana time. I was gonna do it. Still sitting in my fucking NFTs, so that's cool. I did reallocate to ENA most of yesterday. Because of my laziness, I caught the Kaido pump because Kaido ripped for whatever reason, like 4 days ago.
Yes,
it jumped like 30%, 40%. So that was good. And I swapped basically all of it for ENA yesterday. I had to wait for her announcement. I didn't want to like front run it, do any of that weird shit. So that came. And then that combined with the USDH proposal, with the Binance Perps collateral. I don't know if you saw that news. And then listening to an interview with Guy on Empire, it's like, dude, this guy he's executing. I'm not gonna.
Yeah,
I'm not fading it.
I'm thinking something similar, to be honest. I don't have Athena exposed yet. I just love the concept of. I love the idea that crypto is actually getting to the point where you can just bet on good teams making money, and you can make some money. Like Hyperliquid, Pump, Athena. These are the three in my mind. I have exposure to 2 out of those 3. And Athena is just definitely one. The only thing that has always turned me off was the unlocks and the VC stuff. And
it was cool to see him. Yeah, I mean, so he did say he has a big short squeeze got liquidated. Sick. Yeah, thanks English. That means sell the shit right now. So like, because like that's a short term thing. English in the crowd was just saying the Kaido pumped because of a short squeeze. He thinks. So like that was part of the thing that he addressed on the actual podcast, right? He's like, you know, we gave away too much of our supply early on, right? It's like so we have VCs who are in the bag, and frankly, I fucked up. He's like, I'm transparently a first time founder, like I got taken advantage of in some regard, like advice to founders, blah blah blah. And he's like, that's what the DAT is actually for, right? You and I talked about whenever we were bringing up DATs previously, that it's a way to hand from early investors to the next set of investors with a different time horizon, right? Without actually impacting the price, right? They sell OTC in some regards.
Yes.
That's kind of what the DAT solution has been for them. It's like he has been working, like actively working, knowing these VC unlocks were coming, and like that it was adversarial to what he was trying to do because he got taken advantage of. And he saw the DATs as a solution to that. So he's been beating the drum on the march with all these traditional investors, saying what they are. You know, stablecoin X, I think, is the stock itself. And he's like, he basically sold it to these people. He's like, yeah, I got like 80% in that are like, they're on a 10-year time horizon. It's like, that's what we want. Like we're trying to find the next level of alignment. So it doesn't scare me as much.
Interesting. I think I need to listen to that conversation because I'm
really good.
Yeah, I want to learn more on Athena. I've been generally bullish on it in general. I've participated in all the airdrops because I've always been a part of the ecosystem, just not like spy of the spot token because I've always been unsure of the unlock. So want to learn more.
How have you been part of the airdrops if you don't have any of the token?
Well, as in I would then get the token and sell it.
Oh.
So as in you just for holding USDE or staking USDE, you were like earning points forever. There's just always points programs going on.
That's right. Yeah, I forgot about that. Yeah.
Yeah. So I've been doing that since it began, basically. Okay, some other important price action. Hyperliquid still looking strong, just down 1% at $54, and Sui is down a couple percent to $3.50. On the meme coin side of things, things just cooling off a touch in general here. Obviously, yesterday was a bit of a green day. Doge is flat at 24 cents. Pepe is down 3%. Pengu is down 2%. Got Trump flat. Bonk is down 2%. WIF is down 2%. Fartcoin is flat at 84 cents. Rect is up another couple of percent. So Rect doing pretty nicely, up 17% on the week. Trying to look at the weekly on these. Pengu's up 10% on the week. Doge is up 10% on the week as well. That's pretty strong there. And then, you know, kind of sitting on top of all of these, Pump is up 11% to 5.3 bill FDV, up 40% on the week. Go on, Brad.
Nailed it. Yeah. Called that bitch.
But you actually allocated to this one, right?
I allocated that one. That was the one I was bidding in. That one I actually went to.
Good. So we're going to discuss Pump in more detail because one of the first headlines today is Sol outperforming and Pump's big move up 11%. We'll also talk crypto exchange Gemini planning to go public on NASDAQ this week, aiming to raise 317 mil with NASDAQ in as a strategic investor, and Native Markets clearing being the clear polymarket favorite to win the USDH ticker on Hyperliquid. So Brett's going to break that down a little bit later on the show. Ledge, getting into the NFT side of things, anything we need to be aware of here?
Pretty nice CryptoPunk sale that went through for just, I would say, 50 ETH currently, sharing this one on screen. Apart from that, in terms of the NFT majors, most of it is honestly pretty flat over the last 24 hours. So there's nothing meaningful to report on. The other thing I want to pick out, because we do have the Kongs airdrop today, is the price action for Kongs, for the cyber Kongs. Specifically, Also pretty flat, up 1%, down 7% over the week. So there's no big news coming out of NFT land today.
Okay. That is fine. Good update there. Just to get up to speed. Getting to the rest of the roundup, some interesting bits of news from around the space. We've got Eric Trump removed from World Liberty Treasury Company, Alt5 Sigma, to comply with NASDAQ rules. So I think one of the things that's been happening with a lot of these treasury companies is, I don't know, I think it's indicative or it's instructive of the type of people who are trying to spin up these companies and the speed with which they're trying to do them, is that they're not really following the rules. And it sounds like he's had to be removed, not because he's not part of World Liberty, you know, his position there is fine, but I'm pretty sure there's some type of conflict of interest if he's going to be at the treasury company and at World Liberty. Like, you can't do that. There are rules when it comes to this financial stuff, and there are certain things you can't do. And the fact that they're going so fast and they're just like not trying to follow, well, they are obviously trying to follow them now, but the point is they obviously were oblivious to the rule, which I think is pretty obvious. It's just, you know, just something to take a note of. Brett, did you want to come in there?
No, I just like, this is a theme that I'm starting, like, a lot of these DATs have been getting hammered for the same basic shit. Like, they're all speeding to create these companies, and then NASDAQ is finally getting to the point where it's like, all right, bros, you guys are moving a little too fast and loose, and they're not allowing them to actually be listed, you know, do stuff like that. So
yeah, and it's like, no, you can't just do the full allocation in locked tokens. And
did you guys cover Tom Lee getting exposure to the what was it,
World Liberty Fi?
No, World Coin.
Sorry, all these names are the same. What was your take, Brad? Our take on the show yesterday was a little bit like, I mean, it's kind of going down the risk curve here for these treasury companies to then be investing in their own treasury companies. Seems a bit extreme to me, but what did you think?
I think it depends on how he communicates with the intention for doing it. If he gets into these other companies and says, I'm bullish WorldCoin, and plans to increase the exposure, whatever, mix up the stuff, versus like, this is a vehicle that I got early access to that I plan on dumping so that I can acquire more ETH. Like, that's a sailor move. That's a sailor move. Yeah, that's what you want, right? You want the guy who's just like irrationally bullish, because you can't be calling like 60K targets, but then also like going after 60K targets for Ethereum, and then going after like, but also WorldCoin's pretty good, and then, but also this one's pretty good. It's like, then you're just like, yeah, you're whatever. But if he's doing it because he's like, I want more ETH, and this is the fastest path to me to acquire even more ETH, and I'm not afraid to like dump on people in the process, like, that's bullish. You need that.
It's going to be like extreme PvP. DAT, the DAT edition of extreme PvP, like investing in each other, trying to be the first people to dump on each other so that you can go back and buy your own DAT more.
Yeah, NASDAQ will love that.
It's like, you think all the other stuff was against the rules of the NASDAQ. This is this is going to be, I don't know. It doesn't sound right.
The rule was for what? That they need approval if they want to share their own, sell their own shares to raise for treasuries under certain circumstances. And now we're going to PvP land. Let's PvP other shares to not sell our own shares, but still raise money by using other treasury assets.
I mean, is it much different to just saying, okay, we're going to just take a bunch of our treasury and just buy? Like, where does that thinking end, right? Because the idea for a DAT is that you're raising money to buy the spot asset and for administrative costs. Are we saying these DATs also have the mandate to just go trade liquid on Hyperliquid and like buy pump, like just buy pump spot because you think it's underpriced at 5 and it's going to go to 10, then you like, is that foreseeable as well? I don't know. If you once you start opening the investing thing and just saying, well, we're going to try and max trade something, surely the other thing becomes a possibility, right? No.
Yes.
Just gonna have like all these DATs with tons of money, just like trading on Hyperliquid soon. Okay. So something to be aware of. I'm glad that you brought that part up and tied it in with the NASDAQ stuff. Right. Other few bits we want to get through fast. We get to the main headlines today. E-Treasury company Sharplink Gaming decided to buy back $15 million of its own stock since the MNAV was too low to buy more ETH. So this is one thing that these companies are doing. They're buying their own stock back if they're kind of not allowed to buy more of the asset because the MNAV is not high enough. Metaplanet raises another 1.4 bill in international offering to buy Bitcoin stablecoin X. This is the entity which I believe we spoke about yesterday or 2 days ago that invested in the Athena DAT, announced its first token investment in Fluid, the unified liquidity layer of DeFi. So that is interesting to note for me. Some other news.
Yeah, they just expanded to Solana.
Oh, nice. I've heard very good things about Fluid without being a big user myself. I need to check it out. Jack Butcher on the outside announces Gas Wars, an art block on art blocks. It's a 500-second mint window for 500 pieces priced between 0 and 499. I've always said I like a gas war. I want to bring gas wars back. I'm almost certainly going to I don't even fully understand what this is, but I'm going to try and play. I want a gas war. I want a gas war literally, and I want a Jack Butcher gas war piece. So that is what I want at some point this week. Cyberkong's airdrop is today. The checker is live now with 2% going to OpenSea traders. And finally, Trump's True Social allows users to convert gems to Kronos tokens, stopping rumors of their own native token. So that's the roundup, guys. Before we hit the main stuff, maybe we'll come to you first. Legendary, anything catching your attention before we move into the main stuff?
I mean, I was laughing at the Sharplink Gaming part.
Why?
It's getting to a ridiculous point, right? If you distill what you said the company cannot buy more ETH because their MNAV is too low. I'm just looking up at the strategic ETH reserve. It's at 0.96. So basically, company's worth less than the ETH they're holding, but they want to buy more ETH. So what do? Let's buy our own stock, pump our share price back, so we have an MNAV above 1, and we can continue to buy ETH. It's peak ridiculous.
But then there's no more money left to buy it because you used the money to buy the stock.
So begins the dancing of the NFT and the token, right? It's the same shit that we all dance with in our ecosystem. Team that run like Pudgy, right? Pudgy has the Pudgy NFTs and Pudgy Pengu the token. Like, which one do you pour the energy into? Which one do you try to pump the price on? They have to dance because they have two groups of shareholders or holders that they have to try to appease. And yeah, so one to get the other one, to get the other one, get some KOL influencers to pump the token price, but then, bring it back to the NFT for a little bit. It's a dance. I will say, like, the compression on the ETH stats is, I know Big Tommy Lee is, he's bull posting us still, right? He came out with the 60K price targets, and like, he's made people look silly in the past by having people doubt him, and his little magic lines are the things that are hit because he's got all the money. I still feel like the Solana, or not Solana, the Ethereum trade feels a little exhausted with the DAT expression, right? They're all compressing. They're all going below MNAV. They're not raising as much. I don't know. How do you guys feel about it? Like, are you guys going to ride it a little bit longer? Are you seeing it as a trade, or are you just going to let it, like, Tom do his thing and see if we can hit some of these weird targets he's trying to set?
I'm with you, man. I told you
exhausted me.
Yeah, I'm with you. There's a couple of things I think. One, been talking about the DAT stuff in general, and my general thinking has been like, look, every time I see someone do something really stupid, I'm just going to sell a little bit of something across the portfolio, like something. And I think maybe the Dogecoin DAT was another one this week. I was like, let me just go and sell something. So I think generally I'm not a huge fan of this vehicle. I do like the way Athena has done theirs. I think that's a far more intelligent way to structure it. But I know what you mean about the ETH side of things being a bit exhausted. The MNAVs are just, the numbers are just not adding up, right? Like, they're just not adding up. If
appetite is running out. Like, people, it's
like, you need to be trading above MNAV in order to be able to raise more money to buy the shares. If you're not doing that, then you can't keep buying more ETH. You can't keep raising more money. And you can't keep pumping the price by buying your shares back, because everyone knows that the only way you're doing it is to buy the shares back, and then people will dump them again. So I'm not 100% sure where that goes.
The ETF market is kind of feeling the same. If you look at the inflow outflows, apart from yesterday where we saw 44 mil in inflows, the day before we had 96 in outflows, 440 mil in outflows. On the 5th of September, 167. So basically we have 1, 2, 3, 4, 5, 6 days in a row with just outflows. And if you look at the strategic ETH reserve and look specifically for this last week, where is this? How can I make this one? There we go. You can see that basically you had ETH outflows of 162K, ETH issuance of 18K. So that is 190K ETH, and strategic ETH reserves buying 200K. So basically absorbing all of the effect from the outflows, which probably also means that this is why ETH is holding up at 4.3K, oscillating before 4.3, 4.4K. But we are indeed getting very close to a point where the total ETH held by the strategic ETH companies, which is now at 4.9 million ETH, worth 21 bill, is almost surpassing the total ETH held by ETFs, which is at 6.5 M ETH, 28 bill. So quote unquote, like only 7 bill away from the strategic ETH reserves flipping the ETFs. And this is the point where I said that I will get worried about the structure of the market for ETH, at least in the short to midterm.
Interesting. I mean, in the end, these guys are the marginal bid, right? Like this is where the bid is coming from. This is what has sent the price up so significantly. There's no retail coming in to really pump ETH from 4.3 to 6.1 or whatever. This like exhaustion in this arena, or the success of these treasury vehicles is deeply connected to the continuation of the ETH trend, I think. Like, does that sound like an unfair statement? Like that's what's moved ETH in the way that it's done up to now. It feels like it's getting very exhausted because the MNAVs, just the maths doesn't work. So I'm looking for the additional catalyst beyond that, and I can't see one because this has been the catalyst to get to here. Do you think that's a fair? Like, I'm just stating the conclusions that I think are logical, and trying to think of what the workaround is. Like, how do we? I want ETH to go higher too, but like this is the bid, and it's getting exhausted because the MNAV maths is not working. So, thoughts, guys?
Like as we go through, it's like, okay, the question is always, who's the next marginal buyer?
Yes.
Right. So in order for us to answer that question on the DAT size is to know the scale of capital that is at play, right? Because like if we're saying, oh, it's exhausted right now and there's been $500 million of purchasing, but the capital potential is 5 quadrillion, then you go, well, yeah, sure, it's exhausted right now, but there's like plenty in reserves to swap over and like whatever. So I don't have the numbers in front of me right now, I think, but for me to accurately answer that question, I need to like assess like what I think the buy potential is, and see if it's like just a timing thing, because sometimes it just takes time, right? Like okay, the narrative kind of swung away. We'll see if these people just kind of sit in place and then I let it do its thing. We'll catch another like breather, and then that like go upwards into like some catalyst in the future. No idea what that is, but like start pinpointing those things. Like it definitely feels like the short-term trade is over. Like that narrative is like, so it's like either going to go sideways for a little bit, or there's no one coming after this if we don't think there's more capital, and it's just going to bleed out, go down from here, go to chase down the Solana DATs. And then and I think ultimately that question will come to like the educational arc of Wall Street and like how they truly understand and value these assets. And like if we see them locking on to like the Solana stuff is coming forward, right? And I was very vocal whenever everyone was like, oh, ETH is money again and it's worth $1 gajillion. I was advocating that like you still take note of all the things we felt before magic money was on the table again, because right now there's no fundamental reason why ETH should be worth what it is. It's these people like just like, oh my God, he's saying 60K, so probably 60K. Right? There's no tie between like the underlying activity or the the fees generated, like if that's something that resonates with them, and the next thing. And so like if they lock onto the Solana thing, and now Kyle Samani is leading like the #1 DAT for that, right?
Yes.
He tells a very good story. And if he sits there and can tell that story to them, he's been dunking on a lot of Solana people to date. If he tells that story really well and it's more compelling for Wall Street and people start going that way, that is completely disjointed from the story they've been told from Tom Lee. Like Tom Lee is like, believe this thing will go up because it's kind of affiliated with stable coins, which like is a big industry, but like there's no structural tie between those two things other than stable coins are on the chain. It's like, that's kind of a thing. Whereas like now Samani's going to come to the table and he's going to say, look, we've got 50 gajillion transactions generating this much stuff. The rev is this, the activity is this, like all the metrics that we were looking at before the ETH run up, and saying like, is this where things are going? And see how much that resonates with Wall Street, people that operate with spreadsheets.
Sure. I think ultimately, and maybe that's a nice segue into Legendary section now, where he's going to talk a little bit to Solana and Pump moving, and that being the ecosystem that is maybe the hottest now, and maybe for the next few weeks too. It's kind of like the way that risk has always fountained down the curve in previous cycles, but before it was always, with on-chain participants. Now it's like, okay, well, people are going to start with the ETFs. And maybe they'll do a little bit of MicroStrategy. Now you've got this ETH option via SharpLink Gaming and Bitmine. And oh, by the way, you've got Sol as well. So then that's the next one. And each time, the amount of time that people are able to pay attention to it and to get the asset to move is compressed and compressed. And then someone's going to say, okay, but what about Hype D, the one that you have, or the other Hyperliquid ones? Like, oh, but you've done Solana now. Hyperliquid's earning all this money, and we've got a treasury company for that too. It's making us all this money, and then they'll make a compelling case, right? All of these things have compelling cases. The point is not to say one is genuinely a better compelling case than the other. The point is more to just observe the fountaining down of capital and the compression of time that they're able to pay attention to one as people exhaust one trade after the other. And I think that's a little bit what we're witnessing here. Ledge, curious for your thoughts there, and then happy for you to just take that into the Solana section now and give us your thoughts on that ecosystem.
Yeah, no, I absolutely agree with what you have been saying. So I'm gonna go into the Solana section straight away. Also, given the fact that we only have 15 minutes left in the show.
Yes.
And if we talk about Solana, we obviously also have to talk, as you mentioned it at the top of the show, about Pump Fun. Pump Fun is up almost 39% on the week, sitting at $5.3 billion FTV. And the real interesting thing is not the price per se, but it is this site here, which is fees.pump.fun, which is a beautiful overview to see all of the token buybacks. And now, if you just put that in perspective, those token buybacks have been live for, give or take, two months, roughly 60 days since we've seen the token. And in that period of time, they already, with the buybacks, offset 6% of circulating supply of the token. If you scroll down and look at this like day by day, yesterday we've seen 2.5 mil the day before, 1.2 mil the day before, 1.5 mil. So basically every like 8 to 10 days, looking at how fees have been increasing a bit recently, more like almost every week, they managed to offset 1% of circulating supply doing these buybacks. And it's right now, it is working out like Hyperliquid on steroids when you look at those buybacks. And when you look at the fact that we have, where is it? A market cap of 1.9 bill, an FTV of 5.3 bill. So still rather low float token. And that now this circulating supply gets absorbed to quite a significant extent by those token buybacks over a short period of time.
Yeah, man. Like, so this is the reason we called it the trade. I think that if I'm going to look at like how much they're actually generating right now. So if we look at the last even just 24 hours,
it's insane. I looked at it this morning.
4.4 mil in 24 hour
It's double Hyperliquid, right?
Yeah, Hyperliquid's down at 2.7. Yeah.
So double Hyperliquid valued at a quarter of Hyperliquid.
But yes, but we saw this, right? And Hyperliquid's even gone up too. So like I don't even know what Hyperliquid's at right now. Hyperliquid's what 40, 50 bill right now for FDV. So like there's a little bit of disjoint between FDV, market cap, what you're gonna look at, whatever, all that shit. The question has always been, and we brought this up, is one, like the durability of the asset and the application, and then like the frequency of the buybacks. It's been those two things, because even like what Legendary is showing, yes, it is more consistent, but it is still not programmatic, right? So it's like that spigot can turn off at any moment, and then where does the bull case go? Like if you're relying just on that. And then we also saw the thing with Bonk, right? Bonk came in, ate its lunch for a couple of weeks, and then disappeared. Whatever. So like like you can look at that and say, okay, pump clawed back, good. They got their market share back. They have this war chest. They're continuing to iterate. Now they're doing the creators fees thing, which they're seeing a lot of farming on the platform right now because of the creator fees that they set. So like people are generating, if you create a token that runs to, I think it was as a million volume, you get 20K, right? That's not a lot. It's like not a lot of volume to get $20,000. So people are farming this stuff, trying to do whatever they can to get these tokens running to earn the creator fees, because they're paid out like crazy. If you look at the actual fees paid to creators, it's a massive spike over the last like week and a half. So like durability of these buybacks, who knows? Durability of the platform itself, who knows? But if you are a believer in those things, it's a buy screaming. Like I'm thinking about allocating even more, because like, yeah, it's mispriced in this market for tokens that are like valuable applications that are deriving value directly back to the token. It's mispriced.
In a way, is this just like Hyperliquid all over again? Like if you're trying to spot trends and you're trying to, you're trying to see how different assets rhyme with each other. Like obviously Hyperliquid, again, very different circumstances. Hyperliquid don't have the VCs. Pump launched a particular valuation. They're just done a nice, like it's not perfectly one-to-one. But if you're thinking about this PVE scenario, the comparison I'm drawing here or thinking out loud is like you have this PVE scenario where the token is good. They make a ton of money. They're directing it all back into the token, or the vast majority of it back into the token, which just gives everyone so much confidence to just buy this thing and run it up and just be in it. Just be in it, sit in it, and just watch it go up together. Everyone gets happy. Community gets rich. Like that's the feeling that I'm getting. Of course, there was this period of time where immediately after, and you can very easily explain why the dip happened. It's like, okay, you did the raise at 4 bill. It was immediately trading at whatever, but all of those people were liquid straight away. It was a humongous raise. I can't remember the number now, but it allowed people to put in so much capital and to be liquid immediately. Like, of course, those people are going to exit straight away because the risk reward of the time value of the money that like they managed to make so much money so quickly. There's no need for them to take the risk and sit on it. And so you always want to be aware of who the latest buyers are and what price they're in at. And so now those people are flushed out, and you've got people who are now like on board now for what appears to be just the repricing, ready for the repricing, earning double of what Hyperliquid made yesterday. And again, you maybe want to check the numbers to see how consistent that kind of case is, but valued at a quarter. And again, I'm just saying numbers here, so someone please check the numbers. But like the general discrepancy is earning double, valued at a quarter, if not less. There's something there to be done, right? Curious for your thoughts.
Yeah, absolutely. And even I am still in the pump trade. I do think it's a bit more short term than the Hyperliquid one. But the reason
why is that for you? Because that's the other thing I was going to come to. Like, is that because of a macro thing? Is it because of the general market behavior, or is it because of something pump related?
It's for the structural reason that pump is highly dependent on that meme meta to stay alive to a sufficient extent.
So as long as the Sol dat story is good, do you think it's like connected to that in a way as well?
Not so strongly, I would say. I mean, yes, obviously Sol doing well helps meme coins doing well, but there still needs to be like genuine interest in trenching. Whereas I feel with Hyperliquid that the TAM, like the total addressable market in our industry, is way bigger with allowing people to trade perps. And then on top of that, you have everything that's being built on Hype EVM that will be connected to the main part as well. So you have a way broader ecosystem that can help generate fees, which are to be used for the buybacks, where I feel that Pump has like a higher meta dependency on just memes being popular enough to sustain that. And once that stops being the case and people are not using Pump, are not trading memes, and you have like the double effect of the buyback slowing down, people getting anxious, people not trading memes and wanting to get out of that trade. So I feel like for the time being, it's a very good trade, and it's a trade that I have on, right?
Yeah,
but
yeah.
It doesn't have the same time horizon to me as Hyperliquid.
I like it. I like the way you're framing that. It's more just like appreciating that it's slightly more sensitive to a few more factors, whereas maybe Hyperliquid by its maturity now is like maybe a bit of a stone cold winner of that thing. Like there's just they've managed to remove a few layers of doubt, whereas I guess there's just a few question marks you're raising for Pump, which I think is fair. As you said, still in the trade. And thinking that it's positive, but just like wanting some of those layers of doubt to be removed, I guess. Takeoff Tone had this interesting point in the comments. What about goodwill and sustainability? Like Hype has goodwill and it can last without propping up creator tokens. I was actually maybe thinking about that from an alternative perspective where, look, they are embarking on this creator journey now, and I think they are capturing a lot of attention there. That's a new layer that they've added on the positive sense, I think, where they've kind of got these creators on board. It's going to keep attention with them. I'm guessing that it's driving some activity towards the platform too. So I'm actually looking at that maybe from the other side. It's like, I don't think those creators are going to go away. They're going to be heavily incentivized to stay, which means that at least a proportion of this activity will continue to be there. So,
you ready for some numbers?
Yes, give us some numbers, and then let's get into the Hyperliquid conversations. We've actually started comparing the two anyway, Brad.
Yeah, so I got them all down. So market cap ratio, this is market cap ratio. Pump is 12% of Hyperliquid. FDV, it is 10% of Hyperliquid. So we're talking market cap is 1.8 million to 14.6 million, or billion, sorry. FDV 5.3 to 54.1. Like that's the ratio. So 12%, 10%. Fees, the 30-day fees, Pump is earning about 83% of what Hyperliquid is. So
still less, but
it's earning more in the 24 and 7 days. So it's on a strong momentum upwards.
Which I think personally is connected to Sol strength and
of course,
Solana
it's
DApps.
everything, right? It's all
story.
There's all, yeah.
But I guess but I guess what you're saying there is like, and this is what I was trying to get to, like even in the absence of Sol strength and that kind of story, the underlying metrics for Pump are still, I think, based on what you've described, like very undervalued, basically.
It's doubled the 7-day and it's 150% of the 24-hour. So it's 83% of the 30-day.
Okay. What are we doing then? This is like, I don't think this happens much on the show, guys, right? Like,
am I convincing you? Are we, is this,
yeah. Sometimes we all have ideas and we like share them and like, okay, maybe I'm going to put that trade on later. But sometimes it's just like, okay, sorry, what?
I convinced myself. I was thinking about upping the allocation. I've convinced myself that's a trade. Like, dude, it's a trade. It's ridiculous.
Yeah, we don't always do this, but the numbers are just kind of smacking you in the face. Like, Ledge, what do you think here before we go back to Brad and then we'll pivot into the Hyperliquid vote conversation?
Yeah, I need to check.
Don't put on the trade right now.
I mean, this is what I was checking. I have my pump on Hyperliquid as you pump, and I said that I'm scaling out of it with a one-sided liquidity pool.
Yeah.
And to see how much I sold off of that, and luckily, I didn't sell too much. I still have 80% of my EU pump left. I think that's not enough. Now that we talked through all of that, I probably need to plug in my ledger straight after the show and do something about that.
Yeah, I think there's something to do here. Purely based on the numbers, not financial advice at all. We're just talking about the numbers and some metrics. which we thought were interesting. So, okay, that's that. I think I'm very happy with that conversation. Kind of dealt with a bunch of angles there. But Brad, we already kind of talking about Hyperliquid a little bit as part of that conversation. There's obviously a huge conversation going on about Hype still as it relates to the stablecoin ticker USDH and the other people coming into that conversation. It looks like Native Markets, which is like a native, one of the teams is the favorite. But coming over to you here to give us the update, what's the latest and what we need to know.
Yeah, just for the listeners, how much did you cover like yesterday, last few days on?
We did a good amount yesterday as well.
So then the updates is basically that it's coming down to the wire proposals. Everything had to come in yesterday, and Athena and Native Markets on Polymarket is the one team that was not a professional institutional grade entity coming to the table, and it was Max Faggy, it was the ex-COO of Uniswap, it was a few other key players that had formed this this group, Native Markets, to try to bring the USDH ticker to market, and they had dropped their proposal almost immediately upon announcement. So people had speculated that there was a little bit of a prop vote and not necessarily something that was truly democratic or whatever you guys want to refer to it as. Basically saying that they had connections to the foundation and that they were chosen at least by the validators internally before the thing even kicked off. And like, this is all just like a dog and pony show. So they are winning pretty strongly, both in validator voting. So like the early signaling of where validators will vote, and on Polymarket, obviously probably marks our showcases like the most relevant information, recent information, and that is derived from validator voting and what they're signaling. Now, that said, there have been some pretty fucking strong proposals that have come in lately. Now, you mentioned Athena. Athena came to the table yesterday. That's actually like we adjusted our announcement so that they can make sure they can come in after us and showcase that, hey, we're already partnered with the chain to be able to do this stuff. And then last night, Paxos had a V2 drop. I don't know if you saw this. Yeah, they came in with a V2 of their proposal. Like, hey, like we've been listening all weekend. We've been in the Discord chatting. We've been having spaces. I listened to a few spaces, and they, in the meantime, partnered with PayPal and said, hey, PayPal will guarantee integration alongside Venmo so that USDH will be a ticker in all of these consumer applications, and they will have $20 million worth of incentives to the ecosystem. And they adjusted their take rate where like they won't collect any fees whatsoever until it's up to $1 billion, and then it caps at $5 billion. So it increases 1%, billion over billion. So it's 0%, 1%, 2% up to $5 billion, and then it caps at $5 billion for anything beyond that. So they came in very strongly, and I saw a lot of the community step in and say like, love Native Markets, but this is a ridiculous bid from some massive players. Yeah, so it's I don't know that validators have adjusted, or if they even have the ability to adjust, or the vote is actually kicked off. Okay, so controversy is now, because now it's like, do you do what's best for the ecosystem, or do you vote for the boys who've been there since day zero and been like fighting for you? So drama in the USDH streets right now. Paxos is the latest winner sentiment wise that I can see. It was renownedly, like, both from within the community and from just like hype holders, institutional players, everyone was just like, this is the one. We'll see if people stay loyal to Native Markets though.
Very, very interesting. I'm trying to make sense of this chart, which is apparently the tracking the votes. So this is the team stake share evolution, historical view of each team's stake share percentage over time. So if this is correct, so unassigned, the vast majority is unassigned at the moment. Native Markets, as you say, is the favorite with around 20, 30% of the vote that has been cast at the moment. Paxos, as you said, is the second, but only has got 7% of the vote. Athena's actually got 4 as well. But at the moment, unassigned is still the vast majority at 57%. So everything still to play for, I guess. Curious for your take then, Brad. Like, what would you? It's a hard one, I guess, right? Like, it's got some real heavy hitters coming in, providing like a great offer versus what I still believe to be a good offer. Like, I think all the teams, to be fair to all of them, they've presented like a good option. They're just really trying to outdo each other. Do you have a specific view here? Like, what way you would advise them, or what do you think? And then coming to Ledge.
Yeah, I mean, I don't know the finer details of all the proposals. I've seen a lot of the charts that have been thrown up comparing everything. Most of them are, in my mind, they're all 95 to 100% buybacks and hype, which is mostly what you want. So then at that point, it's just like, who do you think is going to steward the actual back end and accelerate growth for the ecosystem? It's hard to argue with the Paxos one, man.
Why?
So, I mean, just because like distribution wins everything in this industry, right? Or in all industries, it's always distribution. It's always been distribution, right? And if you have someone coming to the table, Paxos has obviously been a stablecoin provider for many years. They have a bunch of, I'm sure, regulatory tailwinds that a lot of these other players, like the native markets, like if there's something that native markets wants to do to actually get distribution, like in some of these places, I'm sure Paxos has already been having those conversations for literally years at this point. So native markets potentially starting at zero with some of stuff, even regardless of how good their will and faith is. So Paxos having that, and then having the distribution channels of literally everyone with a phone, bro.
Yeah, that's
just to put numbers to that. What Brett just said. PayPal processes 1 trillion in TPV, total payment volume a year. 400 million users, 35 million merchants using that. And as part of the proposal, as Brett said, you could pay with USDH, you could pay with Hype as well. That is massive distribution potential, yeah.
That's insane.
Which is interesting given that they have the worst ticker in the world already, PiUSD. Like, so they're going to cannibalize their own stablecoin?
Maybe the future.
Maybe it is exactly this bet coming from them, like acknowledging, okay, we tried our own stablecoin, we have distribution, but we didn't have like the vehicle to set up our own stablecoin successfully, and maybe the partnership route is the one for us to take. Could be a bet that expresses exactly that feeling.
I think there's going to be a variety of stablecoins, and I think maybe they'll have their like. I think the future might even be have your hands in as many different kinds as you can, and just take a slice. If you're not able to own one entirely, I don't think the world is going to be USDT and USDC only. Like, I think there's going to be a ton more. And then, you know, the goal is, I guess, if you're behind the scenes and can help with distribution, like to be a part of a variety. Because I don't know if maybe USDT is too far ahead, and that is the one like the big winner, and then beyond that, I think there'll be a variety. What I was going to say was, I think one point to make here though is that even if you lose, you can still go and just buy a ticker and deploy. This is one thing I think that's like slightly lost on people, acting like USDH is some sacred ticker blessed by Hyperliquid and whatever. It's like it's not the case. And you know, you can still like what's it called? USDE, Athena stablecoin, is already on Hyperliquid, for example. Don't know if people know that, but it's already there. So you can still, I think USDG was bought the other day, a different ticker, which I believe it might have been bought by Paxos actually. So there's still the opportunity to participate. Obviously, there's just been this kind of big marketing drive and push in the last few days, and a lot of energy around this specific ticker. Maybe it's, you know, it's clearly the better one, but just pointing that out. And I think a lot of the enthusiasm for the Hype token itself has kind of been inspired by this incredible response to this request for applications. So we'll keep an eye on that. Guys, we're drawing to a close today. The only final headline that I wanted to mention was this one around NASDAQ and Gemini. This is the news that crypto exchange Gemini secured NASDAQ as a strategic investor. According to an SEC filing, NASDAQ will actually buy $50 million worth of Gemini shares in a private placement at the time of its IPO. And I believe that is taking place at some point this week. So we will keep an eye on that. They're going to be buying these shares at between $17 and $19 per share by its IPO, looking to raise over 300 million. We'll keep an eye. It's going to be more crypto IPOs. They've all seemed to pump initially, and we'll see how they go. Gemini, I think, is
I put in for it.
Say again?
I put in for it. I've been hanging out in Robinhood for about a month and a half now. I basically migrated everything to it. And I'm slowly starting to reallocate from coin into Hood. Like just change the ratio a little bit just with everything. And they announced yesterday at their Robinhood Summit, basically like a Zora type or like a Tensor's. Remember Tensor's trading app?
Yes. Vector.
Vector. They announced basically a Vector style app where you sit there and you can post and you talk about stuff. You look at the chart, you can see where your friends are buying and trading and on the charts, like all that shit. I'm changing my allocation a little bit, but I also, they offer IPOs in Robinhood. I went over there specifically for that, and I put in for the Gemini one just to get my feet under me, understand it a little bit better. Small allocation, but just try.
Why not? Sounds fun. Well, we'll keep an eye on it. Wanted to bring that to people's attention. With that out of the way, that's the end of the show, guys. We ran over a little bit as usual, but good conversation. Enjoyed that show. Had some meaningful takeaways, I think, for today. Guys, just a reminder, we do this every single day, Monday to Friday, 7 a.m. Eastern time for 1 hour live on X video, and you can catch us on YouTube, Apple, and Spotify too. Thank you to my co-host Legendary and Brad. Thank you for joining us in the audience on YouTube or on Twitter Spaces. We hope you have a wonderful day. We'll be back again, same time, same place tomorrow. See you then. Bye-bye.